Welcome back, Alpha Hunters. The market is rolling on a little bit today, and we are slightly negative currently on the SPY. We did have a little bit of a gap up today, so we got some things to talk about. But we did gap up about a third of a percent, roughly, and yeah, pushed a little bit higher. Actually made weekly highs compared to Tuesday's high, and we've been pulling back a little bit. So yeah, currently a little bit negative, and we'll talk about some of the stuff that's going on. Let's just check and see how the rest of the markets are doing. Qs, nice little gap up here as well. Where should we gap up here? A little bit over 0.5% there on the Qs. Nice little trade higher. Has pulled back. Currently down about 0.25% there. IWM, nice gap up here. Let's see, did gap up about 1% there on the IWM. You can see kind of sideways choppy there for the first hour. A little bit of a pullback since. DIA, a little bit of a gap down, traded higher. Okay, start the day. RSP gapped up, currently up 0.75%, looking a little bit better than some of the other markets so far today. Yeah, RSP finally got that rest action. I mean, it took a while. I mean, we rested pretty much for a whole week. Waited all the way till yesterday, coming to that 10 EMA. Looking pretty good. Getting that bounce off that 10 EMA from yesterday to today. So, uh, looked pretty good there on the DIA. Or that was on the RSP. The DIA, yeah, nice little bounce there on Monday. Continuation Tuesday. Looks like a little bit of a flag pattern so far. Kind of coming in over the past few days. See how that continues. Nice little base out here on the IWM for the beginning part of this week. Monday, Tuesday, Wednesday. Right on top of those moving averages. Kind of mentioned that on Tuesday. It's like this thing needs to bounce off of these moving averages and off these pivot levels from previous kind of time periods. And finally getting a little bit of a bounce today. Finally. So hopefully that thing continues higher. We'll see if that does happen. The Qs stalling out a little bit. So the Qs got hit pretty good to start the week. But it has bounced. It has bounced obviously from that Monday huge gap down day. You know, not too much else to kind of say there. So just pulling back a little bit today. Obviously, people still a little freaked out trying to assess the AI news that came out over this past weekend. The SPY, kind of just hanging out. Past couple days, not really doing a whole lot. Kind of just resting. Obviously, we had a large gap down to start the week, bounced. So we'll just have to wait and see kind of what it does. But I'd be much more willing to say you're going to have some pretty solid alerts, stop losses, triggers, stuff like that. Below that Monday low, I think it's going to be pretty important because we had that huge gap down and we bounced from there. So if we roll back over, most likely we're going to be taking that out and rolling lower. And obviously we have that higher high between the SPY and that lower high between the Qs between December and January. So we got a little bit of a switch in rotation, which typically when we see that, we'll see some bearish activity after that. So, anyways, the VIX, the VIX, pulling back a little bit, getting in the lower teens there, mid-low teens area. DXY, dollar index, kind of just hanging out. Getting sandwiched in between all the moving averages, so getting a little bit of compressed action here. Where's that 100 at? So you could probably play this either way. Yeah, we got plenty of room down to that 100. So if we get back through some of these, like the 50 EMA, that low that we put in on Monday, you could play that down to some of these pivot levels that we put in back in December, the 100 moving average, that kind of stuff. Definitely you could play that. So, but if we want to break it down here, you can also just hop in the bull's direction. Gold, look at that gold, so precious. Up 1.5%. Gold looking pretty good, just riding higher with the moving averages kind of just pushing it higher. So we never did quite check into that one. Oh, never mind. Yeah, we did check into that 100. I was thinking we never did quite check into that 100 moving average, but yes, that's right. We did. We just never did it after breaking down that low in November. But yeah, this looks pretty good. Wouldn't be surprised if we continue higher. Kind of makes sense in my opinion. Anyways, yields also getting compressed in between the moving averages. Okay. Yields not having a crazy bearish week but on yields there, but just kind of pulling back. HYG looking okay. It's up into this. This has been a pretty solid kind of support and resistance zone, and it's trying to get through there. And it tried to get through there back in November, December, late November, early December, and that's when we had the pretty good drop off there in the HYG. So yeah, it's a really tough spot, and hopefully it does get through there. Or is this thing gonna load? What are we doing here? What are we doing? Yeah, reload. All right. All right, LQD. Yeah, not really seeing a whole lot of bullishness. Obviously, yesterday with being Fed Day, saw some pretty wide ranging activity there, especially on the yield side. A little bit of just kind of hanging out today. Are we getting through this area? Maybe. Yeah, maybe. I mean, maybe. I mean, it doesn't seem like. I mean, this could just be just a retest higher before we have a much bigger drop later on. But uh, you know, even though the LQD and TLT are doing better than the HYG, it doesn't really look like they're just bullish. It just kind of says that they've dropped off so much that getting a little bit of a bounce is not really uh, you know not continuing bearish for now, but they definitely could later because we saw them get shredded there in November, December. As far as sector rotation going for today, we got tech underperforming, communications underperforming, outperformers, industrials, discretionary, staples, materials, healthcare, energies, financials. Okay. Utilities, real estate leading the way. As far as out performers intraday or sector rotation during the day, communications and discretionaries at the lower end. Tech, slight out underperformance, kind of in line with the market there. And then you got energies, financial, staples, utilities, healthcare, real estate, industrials, and materials all outperforming there on the day. So as far as like major news, so we didn't really get, any shocking information yesterday as far as I don't even, dude, I don't even see it here on the news headlines. As far as the Fed, right? I mean, they basically held rates flat. Everybody kind of knew that was going to happen, but they didn't. They also didn't say anything. You know, they're not. They're going to be very supportive of the market. That's kind of one of their pseudo jobs is to not create instability in the financial system. So it's not like they're going to say anything bad unless they have to. You can see, take a look here at the heat map. Microsoft down, Nvidia down. So we've got tech earnings coming in. Oracle, IBM, CRM, Amazon, AVGO. So yeah, we get a lot of tech earnings right now. But as far as the Fed and stuff, not too much kind of going on with the Fed. Information yesterday. It was just kind of more of yeah, you know what? We're here to do whatever we need to do. So basically, the Fed's just not really going to be a factor so much because they usually haven't been. They just, over the previous, two, 3 years ago when we had a lot of different information swings going week to week. The Fed was also making a lot of big, changes. But I think we are done with that time period. I think most people are kind of a little bit more dialed in with what to expect from the Fed.